My name is Jacob Willenberg with Berkshire Hathaway Home Services, and today I'm breaking down the 2024 real estate numbers for Panama City Beach. A key metric that I like to follow is months of inventory. If you've seen my videos in the past, then you know months of inventory is how many months it takes to completely sell out of inventory. 5 to 6 months is typically a neutral market, and anything above is a buyer's market, and anything below is seller's market territory. Let's first take a look at the months of inventory for detached single-family market in Panama City Beach over the course of 2024. We started the year at 8.09 months. Over the course of the spring and summer, we hovered around 4 to 5 months, which is a neutral market. We did, however, see a jump back up in fall and ended the year at 7.29 months, which is a buyer's market. So now that we looked at last year's months of inventory, what really does this mean historically? In this graph, we're going to look back 7 years. So there are a few key moments that I want to point out. Our first spike was in October 2018. This is when Hurricane Michael hit our area, and we were at 8.89 months. The next metric that I want to look at is April 2020. As we all know, that is when COVID pandemic started. And in that month, we were at 5.40 months. So when was the last time we had 7 months of inventory in December? We would need to go all the way back to December 2013, when we had 8.21 months of inventory over 10 years ago. This is impacting resales where buyers are having options to get a brand new home with lower rates and more incentives. Now let's look at months of inventory for the condominium market in Panama City Beach for 2024. We started the year at 5.16 months of inventory, which is a neutral market. As you can see in the graph, other than April, we continued to move up as the year went on. We hit our highest months of inventory in November at 13.15 months and then ended the year at 8.58 months, well above from where we started the year at. As we look back 7 years, you can see we have had more months of inventory compared to any previous year. When the COVID pandemic started, we were at 8.81 months. The last time we had 7 straight months of inventory over 8 months was in 2003, over 20 years ago. So what could be the causes that we are seeing numbers that we haven't seen in decades in the condo market? There could be a number of things attributing this. We are seeing HOA fees go up across the board to help offset the cost of higher insurance rates and repairs needed to make on the project. We're also seeing rental numbers come down compared to previous years, and of course, higher interest rates are having an impact. As we look into 2025, we'll closely be monitoring 10 months of inventory. Does the historical trend in the spring of months of inventory coming down continue to happen? And if so, by how much? We have already seen in the condo market some HOA fees come down for 2025, which is a good sign. So what happens with interest rates? Do we see those come down a little bit this year? That is something that we will closely be watching as well. If you are looking to buy, there could be some great opportunities out there. And if you're looking to sell, pricing and marketing will remain critical. If you have any questions about your property or the market in general, feel free to reach out.